we'll get an update here, give you a little information on Project 2 that I hope will be kind of helpful. I wanted to talk about two things. One is going to be deferred tax assets because many of you might find those in your companies, and it may be a little bit confusing in 2017 or 2018. It might depend on the year end that your company chooses. Again, corporations can choose year ends other than a typical calendar year end, so it could vary. Let's talk about deferred tax assets a little bit, and probably where we would see the impact. It can be for some other reasons too that we might have a deferred tax asset account, but in many cases it's because of things like knowing that you're going to have recalls or knowing that you're going to have some warranty issues, those types of things with products that you've made. So think car manufacturers, equipment manufacturers, but even things like Apple computers, right, or Apple iPhones could have those same types of issues. And what the issue is that you've got two different reporting requirements when you're a publicly traded company. One is to the SEC, or the Securities and Exchange Commission, and that's the information typically that you and I look at that's available to us publicly when I take you to this FINRA site that you see right here. Okay, that's the information that you get. The other is they have to obviously report to the IRS their profits or losses and pay taxes accordingly. Well, the two requirements are different. And so what happens for a company when they make like equipment or cars or iPhones or whatever, and they know that they'll have some losses in the future associated with that, the SEC requires that they show those losses, estimate those losses right now, and show those to the public. Okay? The IRS says you can't show and take those losses, against your income until you actually incur the losses. So that creates a kind of a goofball situation, and I'll try to give you an example. So let's just say that the estimated losses into the future are well, let's say you got 20 billion in sales on some equipment, and you estimate that you're going to have 5% losses into the future because that's typically been your experience. So you got 20 billion in sales, 5%, so you got 1 billion in potential future losses. So that's fine, but the thing about that is that when you take those losses in the future, you get to deduct them from your taxes. So the loss isn't actually $1 billion, it's something less than that. And the way we handle that accounting-wise for the SEC is we record that then as a deferred tax asset for this year. So if the tax rate is 40%, I'm just going to say that was the old rate, and I'm really rounding some things here just to make the numbers a little bit easier, then you would have a $400 million, 40% of 1 billion, you'd have a $400 million tax asset, right? Well, when the tax rates changed and went dramatically lower for corporations, all of a sudden the value of that tax asset actually went down. That's why you'll see for a lot of companies, even though the tax rate changed dramatically lower, they actually had a big increase in taxes that year, or what they had to reserve for taxes that year, because that tax asset account then, now all of a sudden if your tax rate's 20%, the future value of that $1 billion that you had in future write-offs, instead of being $400 million, is now only worth $200 million. So you have to take a $200 million reduction in that deferred tax asset account. And so some of you are going to see that when you go back and you research the companies that you do. Again, that's very typical for companies that make durable goods, we'd call it, right? Like equipment, like vehicles. It could be computers, laptops, those types of things. Those companies may have some numbers that would show up like that. It's going to kind of depend. For Apple, I don't know if that's a big enough number, compared to what their sales and whatnot are, that it would really show up that much. So, okay, take a look at it. If you got some questions, if you really got some questions about that tax change in 2017 or whenever that occurred, see me about it now. You know, we're getting down to the wire here, and so see me about it sooner rather than later. I want to take a look. I think I said, and I haven't been doing this, and I'll jump in the next few days, and I'm going to show you examples of kind of the things that I look for when I'm looking at a company. And one of the companies that was picked by one of the students is Walmart. And, you know, so I go to the FINRA site that you guys have access to. I type in Walmart's ticker symbol, WMT, and I just take a look at it, right? And first I look at the summary or the quote, they call it here. Most of this information is not going to be that vital, if at all, for the paper that I've asked you guys to write, okay? There's not much on here. I got the price. I got those types of things on this first look. What I want to do is get here to the financials, and eventually I probably want to take a look at some of these key ratios too and see what's going on. But let's take a look at the financials, and just to give you guys, again, kind of an idea of the things I look for, look at, okay? First, you get a basic financial here, okay? And that's okay. You can take a look at that, but that information is not terribly in depth. I like to go to, like, the income statement. Okay, let's take a look at that. I get 5 years worth of information here, okay? And I was looking at this earlier, and so some things kind of do jump out at me a little bit. First off, don't ignore the general information. You're going to have to give me a certain amount of that, right? Geez, Walmart has had revenue growth or sales growth. Those two terms are interchangeable pretty much. You know, from 482 billion to 524 billion over those 5 years. That's pretty good growth. You know, you might calculate what that growth rate is for me. It looks like it's about maybe 3-4% a year. That's not too bad for a company that's this big, right? Their cost of revenue, you know, hearing the dollar figures, it's kind of hard. Sometimes I like to toggle back and forth. So their cost of revenues has gone from 74.87 to 75.31. Not a huge increase from a percentage, you know, on a percentage standpoint. But, you know, when you're selling $500 billion worth of stuff every year, that makes a difference, right? Okay. But their gross profit, you know, even in spite of those increases in the cost of revenue, margins have tightened a little bit. That's a good comment to make, that over the years the margins have tightened just slightly. But the gross profit has still gone up about $8 billion. That's pretty good, okay? But look at this. Their sales and general and administrative expenses have gone up about $11 million. That's not so good, okay? So gross profit went up $8 billion. Sales and general administrative has gone up about $11 billion. So my operating income's actually decreased a little bit, okay? I want to take a look at that and kind of try to figure out why my sales and general and administrative expenses have gone up a little bit. You know, I could make some guesses about that now. You know, they're transitioning to more online types of things. They're probably having to spend some money to get up to speed on those things. But at this point, those are kind of speculations. You're going to have to read through probably annual reports to get an idea. You know, was there a big jump in any one particular year? Yeah, you know, maybe not. You know, maybe these first 2 years here, because you went up $4 billion and then $5 billion, so there's 9 of the 11. Then it's kind of eased off. So you might want to take a look at that. But then I come down, you know, their interest expense, nothing going on there really to speak of. But look at this, other income and expense. Okay, I got to figure that out because they had about $3 billion in extra expense in 2018, and then about $8 billion in 2019. Something happened there, and I need to figure out what that is. Okay, those are the types of things that you can't miss when you're writing up your report. Okay, because they jump off the page for me, right? I'm going to see those things. Okay. It's not enough just to report that happened. You need to tell me why it happened. I have no idea why it happened looking at this, okay? But I guarantee you that, you know, for each one of your reports, I'm going to do just what I'm doing right now. I'm going to plug it into FINRA. I'm going to take a look at it, and something like that jumps off the page, I'm going to expect an explanation, okay? What happened there? You know, why did they have other income and expenses? And then they actually had a big jump to the other way, right? Now all of a sudden in 2020, it improved by $2 billion, in other income. And then look at this, the trailing 12 months, it's up 5.3 billion. Okay, that's kind of an amazing turnaround, and we need to know what happened there. Okay, because that really has affected their bottom line. Provision for income taxes, well, obviously when they had these expenses, their income went down, and so their provision for taxes kind of went down. Also, it went down, though, because of the tax law change, right? Somewhere in here is where the tax law change took effect, and so it went down because of that, which has given them a benefit, okay? But we need to know what those extraordinary items are, and guarantee you they'll be in the annual reports for those particular years. Scroll down a little bit then, and I look at net income went from 14. You know, we just really got back to that 14 or almost 15 billion that we were back here. You know, we had dropped down to just 6.6 billion, and you see that down here in their earnings per share. Okay, but now look at this. Our earnings per share, even though we made just a little bit more money, is actually a pretty nice increase. One thing you need to look at is Walmart just consistently buys back a little bit of their own stock, right? It's gone from 3.2 billion shares outstanding to 2.8 billion shares outstanding. So over 5 years, you know, they've dropped the number of shares outstanding by about, you know, a billion, or about 10%, maybe a little better than 10%. Okay, that's just a regular process, obviously, that Walmart's put in place, and you might find this with a lot of the bigger companies. Microsoft has a very aggressive buyback program. Apple has recently started to buy back significant parts of their outstanding stock, okay? And that has a positive effect here. And then we look at the trailing 12 months. It may be important in Walmart to figure out what this other income, even though it's not going to be on the last annual report. This is why you need to watch for these things. It won't be on that last annual report, but a person has to figure out where that 5.3 in other income came from. You know, maybe they sold off something. Who knows? You know, maybe they had some extraordinary gains in some investments or something. I mean, it's kind of an oddball number that jumped out. So those are the things that you need to look at, right? And again, sometimes we want to toggle back and forth and see, you know, where percentages maybe can jump in. You know, their sales in general and administrative, I thought those had gone up, right? Their gross profit had gone down. Not a lot, about 0.5% was all, right? But it did cause a little bit of a decrease in their operating income, right? So these are the big numbers here in their case, is the other income and expense, okay? Then make sure you look at the balance sheet too, right? What's going on with the balance sheet? See if there's some things going on there. Might not be a ton. You know, we look at that. Look at that. They had a big jump up in goodwill here in 2019. Well, what happened there? You know, usually a jump up in goodwill means an acquisition or something of some sort. Okay? And so we might want to take a look at that, because goodwill is something that you book. We used to kind of call it blue sky in the banking world, but it's something that you book when you buy another company. There's probably other examples of goodwill, but when you buy another company or a resource or something, and you pay above the book value for that, then the difference is considered goodwill, okay? And that gets booked, and then it gets written off over time, okay? And so they had a big jump up in goodwill, almost double, right? So something happened in 2019 that caused that goodwill to really jump up. You know, I'm not seeing a lot of other stuff here on their balance sheet that jumps out at me, right? Short-term debt, you know, that kind of accounts payable, nothing major there, right? Look at it, they went from 30 billion in long-term debt to 43 billion that same year that their goodwill went up. Geez, they borrowed some money to do something, right? In order for that goodwill to go up. I don't know. You know, that's something, again, obviously it's jumping off the page at me. And so whoever's doing Walmart, you need to take a look at that and discover what happened, what made those two accounts go up on the balance sheet. So make sure you know, find these things that kind of jump out a little bit. Make sure you report on those, but make sure you report on the other, you know, the main stuff too. You know, especially on the income statement. You know, you want to report on how their revenue's been doing. You want to report on how their profits have been doing. Okay, some of those bottom line things. But then I want you examining this stuff that's in the top, I should say top and bottom line things, but look at the stuff that's in the middle and see what's making up those bottom lines especially, okay? Then it doesn't hurt to take a look at the cash flow, see if there's some things there that kind of jump out at you. Cash flows can be a little bit confusing because, you know, people can manipulate cash without a lot of how do I want to say that? It doesn't really have a lot of impact on what's going on in the company. It's just kind of manipulating cash. You know, for example, you could go borrow some money and just put it in your bank account, right? So you got an increase in cash and an increase in debt, but it doesn't really change a lot about the company. So you got to be a little bit careful. But remember, we looked at that one year, 2019, where they had an increase in debt, okay, and they had an increase in goodwill. And geez, what happens? It says acquisitions net, right? So did did Walmart acquire something in 2019? Well, now I've got my answer. Now I just got to go look at because this is on the cash flow. That's why it shows a negative, because we expended some money, reduced cash when we made an acquisition. So now I got to go look at that annual report and see, well, what did Walmart buy in 2019? I don't have any recollection in my mind, you know, of anything that they bought in 2019, okay? For Walmart, probably kind of small, you know, if that's the $13 billion acquisition for Walmart, that's like, you know, that's like you and I losing a quarter down the drain, you know, it's no big deal, okay? But it's something that does kind of jump out at us here, and so we need to take a look at, okay? So study those things, look for those things that jump off the page at you. Start expanding. You know, here's what I like to encourage people to do. Expand your outline, right? Not that you have to turn that into me, but just as you're looking at this stuff, look at it every day, see if stuff jumps out at you and say, oh, that jumps out at me. I need to write that down, make a note of it, so when I go back and I really start reading those annual reports and whatnot, I know what I'm looking for, okay? It's just an easy way then to kind of keep track of it as you go along. Then you know, here's the basics we're looking at. Now you got to go look at that annual report and see what actually happened that year, right? And report that to me. That's what I'm interested in. The numbers I can see, right? Okay? So yeah, you need to report those to me. You need to show those in your paper, but I can see those pretty easily. So then you got to go beyond that and tell me what happened. Okay, that's what I'm looking for in the paper. So with that, I'll quit talking for the day and let you guys get after it. Still missing a lot of stuff from especially the distance students.